about saying I'm live. Hello, this is my first live, so please do not judge me as I'm going through here because I'm like, I have no idea what I'm doing, but I wanted to start doing this, so I am going to be going live. I'm doing this on Instagram right now, so you guys can all see. I am going to be going live and doing free coaching, okay, free coaching in my Facebook group. You can find the link to my Facebook group in the link in my bio on Instagram, okay? It is called Master Your Money and Build a Bank Account That Never Stops Growing, because yes, that's what we're looking to do, okay? So I'm gonna be doing free coaching in that group, but I wanted to promote it here on Instagram so you guys could see. Go and join the group. It's a small group right now. We're just starting it up, but as we grow, I can start going live more often, but basically, every other Monday for Mega Money Mondays with Nicole Victoria. Yes, let's go. Okay, so what I wanted to do, what I've actually done in the Facebook group previously, I've had some DMs from people and I've had some comments on the posts that our team put up, basically asking me questions that you guys want to see answered. Okay, so I want to read out the question to you first, explain to you a little bit about what I would do in that specific situation and then what the next step should be for you. Okay, so the first question here, hello there, I'm learning a lot from you. I'm currently studying business and finance. What would be the best first step at starting to invest in stocks? I can spare $200 a month. Would you recommend I see an agent or try to do it myself? So that's a great question. I have a ton of people coming to me like, Nicole, I didn't realize that by putting my money in a savings account, I was essentially losing money. Like, yes, hello, inflation. But basically, when we have our money in a savings account, we are not earning probably enough interest to even keep up with inflation. So what we want to do is get our money working for us. And how do we get our money working for us? We do that by investing. So there are a multitude of different ways or different vehicles that you can use for investment aside from stocks. And I know when you guys think of investment, you probably just think of stocks because I mean, that kind of is just, you know, when we think of stocks, we're thinking of that like crazy market with those guys running around and those big TVs and people yelling on the phone and stuff. But that's not necessarily what investing is, and that's not necessarily what I teach or what I recommend either. So when we think about, you know, should I start investing? I think the first thing that we really need to do is understand what our goal is. Because our goal is going to help us figure out what type of investment is going to be the best for us in our personal situation. Stocks could be a good option. Real estate could be another option. Mutual funds, ETFs, bonds, GICs, like there are so many different investment vehicles that you can use aside from stocks. So you really want to make sure that you are educated and informed about the different options that you have before you go out there so you can figure out which one best suits your goals. The next one that you want to look at is your timeline. So you have your goal, but what is your timeline? Because there are some investments that are riskier than others, i.e. stocks, okay? Stocks are going to be risky. And when I say they're risky, they're volatile because the price changes so quickly, right? Have you ever looked at a report that's showing you the changing prices of a certain stock? Like they go up and down 100 times a day, 1,000,000 times, you know what I mean? Like they're all over the place. So what you really want to do is understand what your timeline is, because typically the shorter your timeline, the less risky of an investment that you want to go into. The longer your timeline, the riskier you can get away with. And I mean, we can go through some of this training maybe in a different call. I can prepare some spreadsheets and stuff to look at what the S&P 500 has done, which is just a record and a measure of the 500 biggest companies in the state. So we use this index as a way to see what's going on in the stock market as a whole and then what is the health of the stock market, okay? So next thing we want to do, we want to understand our goal, we want to understand our timeline, and next we want to understand our tolerance for risk, okay? When I say tolerance for risk, just because a stock can get you a higher return doesn't necessarily mean that that's where you should put your money. Like if you think about it this way, okay, so if you bought a stock and tomorrow you saw the price of that stock decrease by 50%, would you freak the fuck out or would you go and buy more, right? And that's what you want to ask yourself. You want to figure out, what is my investor profile, okay? What is my investor profile? Am I going to be comfortable? Am I going to be emotional, right? Because the best investing is not emotional investing. But as hard as we try, a lot of us will get emotional while we are investing. I mean, it's our money. So we want to understand what our investor profile is, who we are as an investor, okay? And there are definitely tools that you can use for this. I actually have a course that I'm launching soon called The Millionaire Investor. It goes through all of this in detail, like what different investment vehicles you can use for what different goals you have, and like an investment 101, a history of the stock market, you know, how to understand what an ETF is, a mutual fund, all of that kind of stuff. So that I can talk about that a little bit later if you guys are interested. But the last part of that question, would you recommend I see an agent or try to do it myself? That really depends on who you are as an investor. Again, do you have a good knowledge of the stock market? Do you understand the different investment vehicles available to you? Do you understand how to put a strategy in place and diversify your portfolio? And when I say diversify, I mean you want to have, you know, okay, let's look at it this way actually. So imagine you buy a stock, you put all of your money into one stock. Even big companies fail sometimes, right? So just because you're investing in a big company doesn't necessarily mean that it's safe. So you have $10,000, you put it all in one stock, that company shuts down. That company goes bankrupt. You have lost all of your money, okay? But what has happened is if you diversify, you put your money in a bunch of different baskets, right? You have different options available to you. And you spread your money out over all of those different options across different industries, across different companies, across different investment types, okay? So that if something happens in one and you lose it all, I mean, it sucks, but it's okay because you didn't lose everything. So that's what I mean by diversify. So you really want to understand who you are as an investor and what your comfort level is, how much knowledge you have, and if you're able to actually go back and create your own investment strategy yourself. Seeing a financial advisor can be a great option. So a financial advisor is just somebody who works for a firm or a brokerage, maybe your bank, and they can help you purchase your investments. But one thing that I want you to be aware of, and they're not all like this, but a lot of them are salespeople, right? They're trying to sell you something. So just make sure that whoever you are going with, you, I guess, understand who they are, you trust them, okay, and maybe get a couple different opinions before you go and purchase something specifically, okay? My next question says, a question for you, any thoughts about using automated services like Wealthsimple? I'm not sure what they mean by automated service. Like I use Wealthsimple, I invest through my TFSA on Wealthsimple. I'm not really sure. I mean, so I love Wealthsimple personally. Wealthsimple has a few different options. My understanding is that you can get a financial advisor through Wealthsimple to help you build your portfolio, or you can also invest on your own. There are other kinds of brokerages like robo-advisors where you can go online to this robo-advisor and it's basically a financial advisor, but it's a robot, right? And it uses different algorithms and mathematical equations and your investor profile to help you build your portfolio, okay? So Wealthsimple, I think, is great. I really, really like them. I've had no issues with them personally, but again, you need to understand what your investor profile is so that you know what type of a brokerage you should be going towards. And I know a lot of people in the financial industry will tell you, like, the best thing is to go and just like do it yourself and just buy an ETF because it's a lower fee. But like, I don't necessarily agree with that. Just because something, you're paying a lower fee for something, if you have to manage it yourself, but you don't know anything about the markets or you don't know anything about the investments, like that might not be the best option for you. And this is why personal finance is so personal, right? And it can change for every person based on your knowledge and your comfort level and like how much time you actually want to spend, you know, getting your money working for you, because the whole point is for your money to make money for you so that you can stop trading as many hours for dollars. But if you're just trading more hours to watch the stock markets every day and like learn about all the different industries, then like, I don't really think that always makes sense, right? So to each their own, but yeah, you might want to use an automated service like a robo-advisor, or you might want to go full service or do it yourself. Again, it depends on your investor profile. Okay, I want to know if investing in a company who is doing a 4-1 split is a good idea, or if buying the whole share is better. So it doesn't, okay, let me explain to you guys what this person is asking. So there are two companies that are doing this right now, Tesla and Apple. So I think Tesla already did it. I don't really follow like the specific stock market super closely, but I know that Tesla was doing that. What they were doing is they had like their one stock, but their one stock was very expensive. So what they've done is taken that one stock, but just broken it down into 4. Okay, so they've increased the number of available shares in their company. Investing, so if buying a whole share is better. So I mean, it doesn't really work like that. It's basically the same thing, whether you buy a smaller portion after or whatever it is. Like, they've taken that one stock and they've broken it down into 4. The reason why they've done this is to make it more accessible, because the price point, I think Tesla is like, I don't know, $1,600 a share or something. And if you're going to invest in a share of Tesla, you would need $1,600. But when they do this stock split and they break it down into 4 instead of just 1, it makes the price point that much more accessible. So that can definitely be an option, or a great option for somebody who is looking to get into a company at a lower price point. In terms of what's going to happen, I mean, it's very speculative for me to be able to say, okay, yes, this is what's going to happen, this is what's going to happen. If something, I mean, if we look back at like economics, okay, supply and demand and the equilibrium price, right? Supply and demand are in inverted axes, the equilibrium price is in the middle. If the demand for something goes up, you know, the equilibrium price goes up. So the price of the share should go up. When we're talking about, you know, is it overvalued the way that it is? I mean, I can tell you that I think Tesla doesn't really make any sense fundamentally. But again, I don't know, right? I don't have a crystal ball. I can't predict exactly what's going to happen with each company in the future. And this is why I don't teach like speculative investing. And when I say speculative, we are, you know, buying something with the hopes of short-term gains, like a get-rich-quick kind of scheme. Like when you think of day trading and like trading stocks and stuff, and you're in the stock market and you're trading those stocks and you're doing it a bunch of times a day and the angry people on the phones and whatever, like that's not what I teach, because that's akin to gambling. Would you take all of your real estate, would you take all of your retirement savings and bring them to the casino and throw it all on black? Like I would not do that. So if you wouldn't do that, then I probably wouldn't recommend for you to go and try to day trade and play the stock market, right? The best way to invest is to look at a long-term strategy. Unfortunately, there is no get-rich-quick scheme, and I wish that wasn't the case. You know, it'd be nice to just be like, I'm gonna put $1,000 in this stock and be a multi-millionaire tomorrow, but like, life doesn't really work like that, right? So most millionaires are, I mean, is it possible? Yes. I think I read a statistic, I can't remember what it was, but most day traders, like they end up just losing a ton of money. The people that try to play the stock markets, they end up losing money because they are speculating. The best way to look at investing is to invest for the long term, okay? We want to look at what we can do today, what changes we can make today to put money aside, put it in safe investments so that it can grow over years, right? The earlier you start, the less money you have to put in. The way that my retirement savings is right now, if I just left it in there because I'm younger and I still have a long time before I need that money, if I just left it in there, I never put anything else in, I would retire a multi-millionaire. Why? Because of the power of compound interest, because my money is working for me, right? And I'm not having to be involved in the day-to-day and trying to play the stock market and like beat out the stock market and all that kind of stuff. Like you can just invest in indexes, and I can talk about this again more in another video, but these are types of investment like an index fund or an ETF, which is just a collection of stocks, okay, right? So remember, we don't just want one, we want a bunch of different ones to diversify. So we have a house with all of our different little stocks and everything inside of it. That could be like an ETF or a mutual fund or an index fund. We just buy an ETF or a mutual fund that follows the S&P 500, which is one of the indexes that measures the 500 largest companies in the States, reliable companies, companies that everybody likes, that do well. You invest in a fund that owns a piece of all of those 500 companies, and you just leave it alone. You just leave it alone, right? And then you wait years, and then your money just grows for you, and you don't have to do anything, and you make a ton of money, right? Investing doesn't need to be complicated. Do you need to understand what you're doing? Yes. Do you need to understand the different options available to you? Yes. Do you need to be aware of the different strategies like dollar cost averaging and that kind of thing? Yes. But do you need to play the stock market every day to like get rich? No, that's not what I teach. That's not what I believe in. And I mean, there are other options for investing as well. I love real estate. I have a real estate background. Oh, somebody just popped in. Sorry, I just got here. I do have another call coming up, guys, but I'm going to try to answer these questions as best as I can. What's your opinion on investing in companies when they do stock splits? Hey, Melinda. Okay, so I actually just answered this. So if you want to go back in the live, rewatch that part again, but that should answer your question for you. Again, I don't like specific things to do with stocks and like which companies are the best and like cryptocurrency and stuff. Like that's not really my thing. I'm here more to teach you long-term investment strategies, how to find the money to invest, how to start building a bank account that never stops growing, not how to day trade, right? Because again, it's speculative and I don't necessarily believe in it. Okay, so that was all of the questions that I had for today. This was super quick. I just jumped on here because I have a full day of application calls again today. You guys are all amazing. I love you. Thanks for joining in. I hope this was okay and I didn't speak too quickly. But if you have any questions, go join the Facebook group. Okay, post them in the Facebook group and I will get to them. And every other Monday, Mega Money Mondays, we're going to do this. I actually also did a soft launch of my website, so would love your guys' feedback on that. I have some of my digital products available on there right now. I have a pre-launch for my Millionaire Investor course that is coming out. Again, it's like a stock market or like an investment 101, okay? Teaching you the fundamentals that you need to know to build a friggin' bank account that never stops growing, okay? It's a self-study course, so go and check that out. I also have on there my smart money home buying method, which is amazing. It is the exact method that I used to buy my first home and use it to build massive wealth, okay? I flipped that house in 2 years. I made $150,000. And you can make so much money with real estate. And I know everybody's like, stocks. Stocks are amazing, but I love real estate because you can make money 3 ways, okay? I'll get into this very quickly. The first way is through your monthly rents, okay? You're making money every month because the rents are coming in, okay? The second way is through the appreciation of your asset. The asset is appreciating in price, okay? The house is going up. My area is up like 15% year over year, and guess what? I'm making that 15% not only on my down payment, but on the full amount of the mortgage. So say you put $100,000 down and you own a $500,000 house. If you make 10% that year, you're not making 10% on your $100,000. You're making 10% on the $500,000. You just make $50,000 for doing nothing, for just like living in a house. So that is my smart money home buying method. You can check that out on my website as well. And then lastly, I have my Quick Wins Playbook, which is amazing. It shows you exactly how to negotiate in every freaking category, how to negotiate your bills down, how to negotiate your salary up, because what we really want to do is we want to focus on how to keep as much money as possible without changing our lifestyle, right? Keeping our lifestyle going the way that we want it, not giving up everything that we love, but like how do we just pay less money for it? How do we pay less money for it? So that is exactly what the Quick Wins Playbook is, and it has the exact scripts that I use. So I am actually a certified negotiations expert. I have gone through extra schooling and blah, blah, blah courses to get that designation. So I use that designation to help you guys with the exact scripts that I would use to negotiate all of my bills, okay, and negotiate a higher starting salary, yes. Okay, ladies, I'm gonna log off if I can figure out how to do this here. If you need anything, again, head over to my free Facebook group. We're gonna do free coaching every other Monday. If you have any questions, put them in there. If you're kind of anxious about asking them in such a public forum, send me a DM. I or the team will respond to you. And yes, if you need anything, love you all. Let me know. Thank you so much, everyone. Bye.